Hello there, opening great as always. Just want to send you a quick video. Today we're doing a little bit of a workshop here, or whatever you want to call it, lesson, lecture. I put on a nice red sweater for you, so you know, in this market it's kind of a theme here. As you can see, also the background of 1000X is, you know, whole red. So I hope you guys are loving the new updates, because we did a lot of work on 1000X recently, and also some of that new work is going to be featured in this video. But the main topic here today is, of course, and I'm often talking about projections. It's, you know, kind of like that important part of the far end of the research. But I'm sometimes getting a question from you guys about, hey, you know, Jeremy posted these projections, you know, in a video, and I just tried to do the same, and it's not exactly the same, right? So basically here we are going to talk about why projections are basically, well, dynamic, right? Because of course new information is coming in, the companies are reporting numbers, right? Which means, you know, if Jeremy did something, you know, a couple months ago, a lot of things change, right? So we have to update all of the information. We cannot just like look what was in the video, you know, like 3 months ago and expect completely the same, right? And today I'm going to use Celsius as an example, right? One of the companies that we are definitely talking about here in the group, one of the companies that, you know, many of our members made a lot of money on, right? It's not one of my stocks, so I'm not that familiar with the company, to be honest, even though I tasted Celsius, you know, here for me in the Europe, it's a little bit of a, you have to go a little bit out of your way to get your hands on it, but it's pretty amazing. I tasted a couple of those, you know, all of the crazy extra blends, and they were pretty solid. But let's get into practical topic, right? Because, for example, I had, you know, one of you guys here send me this, right, from Jeremy's videos. Hey, Celsius, honest stock emergency upload, right? And basically showing these numbers and, hey, you know, I've tried to do the same, but the numbers don't exactly match. Well, let's look why, right? So let's first look at the cause, and then what we can do about it when we are actually doing these projection. And unfortunately, I don't have the YouTube premium, so this is quite embarrassing, but let's jump into it. Because when Jeremy is here in this video, oh my god, I'm not going to re-record this. You're gonna have to live with my blooper here. But this is video from November, right? November 2025, which already that's half a year ago, right? So lots of things changed since then, right? So basically since then, of course, Celsius recorded new earnings, which a little bit skewed the numbers, right? Which means what Jeremy is doing in his projections here, in his new projection here, it's going to be very different, right? So what we actually want to do is to update all of the information depending on what analysts are expecting now, or of course what we want to expect. And I was talking about this in one of the other lessons. But good starting point for these projections is simply take what analysts are expecting, base it on that, and only when we want to go further, deeper, we can kind of like tweak into it, do our own numbers, more detailed. But always for a starting point to even see if this is something interesting, I'm, you know, basing it off analyst numbers, right? So of course now I'm simply not putting the same numbers as Jeremy did here, right? Because since November, all of these numbers in the first column changed, right? So as you can see, you know, when Jeremy is doing projections for Celsius, he's basically counting with like 230 million in net income. However, we only have 63 here, right? So of course there were a couple of things that happened with Celsius Holdings. Again, company is dynamic, right? They made some of the acquisitions, you know, some things basically hurt net income, right? Which we can see, you know, when we go to 1000X. And now you can see that we also have, you know, kind of like a more detailed also expectations from analysts. But when you look at the quarterly numbers, you know, you simply had this kind of a loss here, and then very modest net income of 4 cents very last quarter, right? Which means, of course, Celsius is a growth company, right? So it's a little bit all over the place, right? It's not Coca-Cola in the kind of like late stage. We have to count with a little bit of a volatility of earnings here. But when we a little bit normalize it over trailing 12 months, we get slightly smoother curve, right? But that simply means because of these, you know, negative quarters, we just kind of got this number here, which means we have to put a different net income growth if we want to normalize. So what I'm going to do is to look First on the top line, right? And let's say I'm doing a bull case, so I'm just really taking the high end of what analysts are expecting. And as you can see, right, the new addition to 1000x, now you can see basically the low, average, and high estimates from the analysts, right? So you can already basically have it prepared for like the bear, medium, or kind of base and bull case. So 3.8 billion on the high end, right? So I'm basically making sure that this is roughly aligned to 3.7, 3.8, right? Which means analysts on the high end are expecting, Celsius to grow 50% next year in terms of revenue, right? And then I'm going down for EPS, and let's look $2.2 per share on the high end, right? So I basically want this number to be somewhere around 2.2 if I want to do a bull case, which, since we are starting from such a low base, it's basically 800% increase, right? So of course this almost looks a little bit weird, but that's what happens when you're starting from like a very low number, right? Because once again, here we are doing projections for a growth company. It's not Coca-Cola where you would be dealing with, is it 6%, is it 7%? That's boring, right? No, here we are doing a growth stocks, right? So we need to make sure that this number is basically matching those analyst estimates. Cool. And now I'm actually getting those, 2.2. Let's see how much Jeremy. So Jeremy basically in his projection has 1.9, right? So he's also basing it on those analyst projections. Probably where they're a little bit more on the bullish end, but not entirely there. So I'm basically now making similar cases Jeremy is doing, right? So that's what we are doing here. And then and of course Jeremy is putting quite optimistic price to earnings multiple, 35 to 40. I always try to be, even in my bull case, a little bit more conservative, I would say. So, I'm putting 20, 30 there. Since I'm just not as bullish as Jeremy. Let's leave it there, right? But even there, right, this is telling me that, Celsius Holdings is now definitely undervalued, right? I mean, even with those numbers and again, I'm doing bullish scenario now, right? But at least in this bullish scenario, it should be basically $45 stock today, right? Or even like, let's say 67, right? So there is at least, again, and these are simple numbers, right? Simple numbers, 50% kind of upside. Of course, again, market dependent and can make all of the waves, but like it's there. And then of course I can continue with these projections, in the future. Let's say the growth a little bit normalizes, and I'm again not that familiar with the company, so I'm not, claiming that this is like the exact same solution, but just trying to a little bit extrapolate what happens if then it normalizes to like, let's say 20%, or let's say 30, and then 25, and then 20, and let's kind of, have the margins. Or actually, let's do one more thing. Let's go into the charts and let's look at the margins. So as you can see on that high end, sometimes, Celsius has even like 20% margins, right? So it's possible to be even more bullish. But let's say when it kind of stabilizes, somewhere around those 15% margins, probably not unrealistic, right? And then I check it against my numbers. Hey, I'm having those 15%, right? So this is also kind of like a realistic number, right? This already happened. If I'm like hyper bullish, I can maybe push these, margins to, let's call it 20%. But 15, that's kind of like a healthy bullish, right? So, and I'm continuing this number into the future, and hey, it can definitely be somewhere around 80 to 130 by 2029. Which are good numbers. 27 to 40% compounded annually. That's pretty good, right? If we are getting these numbers, we are definitely outperforming the market. That's kind of in that, very healthy long-term investor, getting those 20, 25, maybe 30% aiming for that. That's great, right? So yeah, I think that's about it, right? So I hope this makes sense. But yeah, long story short, right? You always have to, sure, you can see what Jeremy is doing, right? You can see what other members are doing inside the group. You can see what I'm doing. But you can always ask, first and foremost, right? Ask in the group. Or secondly, you can just simply do those projections and go, back and forth between the charts page to see what analysts are expecting, and then here. And update that, right? So once again, these projections are dynamic. It's going to change next quarter. Let's see if there were some important adjustments, let's say by analysts, right? Or of course now, if I would like to get deeper, I might want to run some my own numbers, right? Look deeper into actual investor relations page and see, are those analysts on the money, or are they maybe like a little bit off? Do I agree with more of those analysts on the high end, or do I agree more with the analysts on the lower end, right? But now we are getting a little bit into more like let's say advanced topics and further. But for baseline projections, what I've basically shown you now is roughly enough for the baseline projections, right? So yeah, let's do more. Appreciate ya. Take care.